In this video, we're going to talk about the top 3 stocks I'm going to use in 2020 to write covered calls and sell cash secure puts. I'm absolutely sure you're going to love this one, so stick around. Hey, welcome back everyone. It is time for another red hot covered call video. Well, that's right. Today we're going to talk about the top 3 stocks I plan on using for 2020 to generate that guaranteed cash flow. Now look, in this video, we're not going to talk about all those canned stocks you always hear on all those other YouTube videos where they talk about the 3 or 5 best stocks to write covered calls, and always they're low delta stocks where you barely make any premium. Look, I love those stocks, but at the end of the day, I know a lot of you want a little more to chew on, right? You want to know some great stocks and stock strategies in the covered call and cash secure put selling premium strategy to up your game. And that's what we do here, right? I don't want to just give you canned stocks that are super safe. Look, what I want you to do is this. I want you to get your financial education. I want you to get your experience so you understand the stocks you're dealing with. When you make that purchase, we take on the risk, then we write the covered call. We have to have patience for the time frame for which you put in the trade. Then we have to have our exit strategies. It is a strategy that can be super profitable, for which I've displayed over the past 3.5 years. But you just have to put in the homework. Right? Nobody is going to hold your hand to get across the goal line. I've told you that for 3.5 years. So what we need to do, we need to get comfortable with it. Because anytime you get comfortable with anything, whether it's replacing a flat tire on your car, whether it's learning spreadsheets at your job for which you had no experience with spreadsheets. Look, once you get comfortable with it, you can do it. And I'm telling you, once you do it, you're going to have success. You have to believe that. Now look, we're going to talk about 3 stocks that I use today, and like I said, they're not for everyone, and we always do our due diligence. And to be honest with you, I own one of these stocks. The other 2 I'm going to have to purchase. I'm going to have to use my technical skills, right, my chart reading skills, to make sure I do a low entry purchase. These are things we talk about here at the channel, and I'll tell you, I know I'm upping your game. Now look, let's go ahead and get to this. We're going to talk briefly about the free CTP dashboard. Now, we're not going to talk about what it is, but it's important for a lot of you new covered call writers or people that are interested in the strategy. We need to find a place, right, where we can screen the best stocks trading now, so we can buy the best stocks trading now, so we can then write the covered calls. Now, I don't pick these stocks. The stocks that are on the free CTP dashboard are stocks from the FFTY ETF, which is the IDB 50 ETF. So the IDB 50 are the 50 best stocks trading now. That's a great starting point, right? Think of it like real estate. If you're a real estate agent, you need properties to sell. So where do you go? You go to the MLS listing page, right? That multiple listing page for which you can find properties, maybe then get hooked up with another agent so you can then start selling properties. Whereas before you didn't even have a property to sell. Now because of the MLS, you have an opportunity. Well, think of the CTP dashboard like that. It's your starting point of the best stocks trading now. Now, with that said, there's no guarantees that the stocks won't go up or go down. That's why it's all about researching, doing our due diligence. The CTP dashboard is a research dashboard. It gives us a starting point of great stocks, and then we do our due diligence. Now, it's important when you watch these videos on YouTube, when you hear all of these gurus talk about these stocks, that stock, 3 trading patterns, this, that, and the other. What's important is that we need to have a foundation of doing our research, because we're putting real money in the game, right? This is real money that you're investing, money that you earned. So you better have done your due diligence, because there's always risk. And that's important because the 3 stocks I'm going to show you going forward are stocks that I have done my research, I've traded, I have experience, I have expectations. That's the important thing. Right? Because I've always told you that as you get experience and you get this little basket of stocks, you're probably going to go to these stocks more frequently than look for new stocks, right? I mean, you're always looking for things to up your game with research and screeners and things like that. But once you find that set of stocks, that basket of stocks, and I know a lot of you are looking for that basket of stock because you email me. Well, you have to find the stocks you're comfortable with trading. These three are a part of my basket, for which I have about 10 stocks. And quite frankly, if you go back to my YouTube channel and you watch some of my videos, you know what I love playing. But with that said, if I were to go out and look for a new covered call candidate, well, hey, look, I want to do my research. It's about research in 2020 because the markets are going to fluctuate to the point where we could see some 1,000-point down days on the Dow. And you do not want to be holding something that you don't know why you're holding it. So it's very important. We do our due diligence. We do not buy stocks because we got some hot email or somebody on YouTube is showing you a 5-6 yard chart where the stock has rallied some 10,000%. I could care less about what it has done. It's all about the here and now and quite frankly, the next 30 days. Because I'm going to buy the stock, I'm going to write the 30-day covered call. See, that's what's most important. You understand that it's about the here and now. We use historical charts and indicators to give us that point of reference, to give us that great research, to give us that feel, right? We're going to feel that. We're going to own that research. That's very important. That's going to be my tip of the year. Do not be that guy that emails me saying, look, I bought this stock and now I'm in a world of hurt. What do I do? Well, at the end of the day, remember, this can be successful, but man, you got to start out on the right foot. Now let's go ahead and get to that list right now. I know you're absolutely saying get to it. One of my favorite stocks in 2020 is going to be 3M. The reason for that is because 3M is one of those great staple stocks, okay? Wall Street buys 3M. Now, they may rally them up to all-time highs or sell them off, but 3M has thousands of products in the grocery store. So 3M is global. They are a staple stock and they pay a huge dividend. Look at that dividend, okay? It's a nice 3% dividend based on the stock price. But if you're playing covered calls in a 30-day window, this is how I love to play 3M. I will own 3M in my long-term buy and hold portfolio. But I will use 3M for those great 30-day covered calls for which I straddle a dividend. And I've talked about this. This is dividend capture plus a covered call right, for which I combine the two to get that 5 and 6 and 7% return on a 30-day trade. Let me show you right here with the chart. Now, this is a 5-year chart. The reason I like 3M now is because we've had the China trade wars, and it has been beaten up. Because remember, the global economy is getting beat up because when you have these two huge economic countries battling through trade wars, look, these companies with global exposure are not going to be selling as much. And 3M has another problem. They just don't have the growth. They don't have growth like these tech stocks that are jumping off the charts, right? So you have slow growth, you have China trade wars talk, which is going to limit profits. So 3M is in this bad spot. But what I love is that support line. That's a 5-year support line. And I'm really looking at that 160 as a support. So I'm buying 3M when it's near 160. I've done that many times last year. And I have profited from it because Wall Street loves to rally them a little. Now, I will say this. We've had some good trade war talks. And every time that happens, 3M will jump 3 and 4 points. It'll move in a month 10 points. Well, that's what I want. I want a stock that moves higher to sideways, a huge staple stock. This thing is a $100 billion company. It has huge volume. And quite frankly, Wall Street will be in this stock. It's in a ton of ETFs. It's an S&P 500 company. To be honest with you, if I did my research, it's probably an S&P 100 company. It pays a very nice dividend. In fact, let's talk about that dividend. So this is how I'll play this stock for that dividend capture. So let's say the dividend's right here, and they pay something like $1.44, okay? So what I'll do, 2 weeks leading into the dividend or the X date, I love to look to write a covered call out here. Then I'm going to do the 30-day covered call, and I'll look to get about $1.80 on the premium. So whatever that strike price is, I'll look to get $1.80 premium. Now again, I own the shares. I'm going to go ahead and write that out of the money strike. I'm going to straddle the X date because as you know, Most options will go to the final day of expiration before any action. So usually I can hold the stock through the X date, pick up the $1.44, and then I'm hoping the stock heads towards my strike price so I can have my shares taken away, and I keep the $1.80. Now, if the stock does not because it's wavering, and quite frankly, we might get some trade war talks that pushes the stock lower, I collect the 144, keep the 180, combine those two. Look, that's going to be a nice 30-day crumb for me. And that's what I'll do. That's what I'll do with stocks like 3M that pay very large dividends. I can straddle that X date and double dip the profits. Now, I know some of you are saying, well, where am I going to find all those great dividend-paying stocks? I mean, I don't have a list. Well, that's what I created with the Dividend Dashboard. It's a part of the upgraded CTP Dashboard subscription. I loaded up with all the stocks that are paying a dividend in the next 10 days so we can go in there and sort them. I love to go in and sort them based on quarterly dividend, who's giving it during this 10-day period, and then I love to start my research. That's how I found 3M last year, and I've been trading it for some nice profits ever since. The Dividend Dashboard is my favorite dashboard because I love going in there and just finding those big dividends. In fact, I did one just this week with ADV, for which they're paying a big dividend next week. I'm looking forward to writing a covered call and capturing the dividend. Look, if you're interested in the upgraded CTP Dashboard and what we're doing, just go to my website and click Updated CTP Dashboard. Now look, I know you're already thinking to yourself, look, this list is no different than anything else I've seen on YouTube. Man, give me some juice. You know we want the juice. Well, of course you know I play some higher volatility stocks. Yeah, I love using the big staple stocks for those nice 30-day covered calls and the weekly covered calls. I love using the big companies because they give me volume. And that's very important. That's a golden rule. We need the volume because when we have volume, we have buyers for our options. Okay, it's very important. Love the dividend capture strategy because I'm able to double dip the profits. But when I'm looking for that juice and I want to use a company, of course, NVIDIA hits my list. I mean, you know, last year I was using Alibaba, NVIDIA, Roku, Win. I mean, I will play these huge S&P type companies, and I've used them now for over 2 years, and they pay very large premiums. One of the reasons because their stock prices are so high, but also they have high implied volatility, and those deltas are big. Now, with that said, you know that you have to have a cast iron stomach. I don't recommend anything. You have to be comfortable of owning NVIDIA, a stock that will trade in 40-point swings. You know, last year Alibaba fell from my purchase price of 180 all the way down into the 130s. Now it's recovered, but I'll tell you what, you have to have your experience so the emotions come out of it. I made great decisions, and although in the end the trade was only 5 or 6%, and I did a video on that, it's still important that we have to have our education and our experience so we can handle playing higher volatility stocks. Now I'm showing you NVIDIA because NVIDIA has had this tremendous rally, but more importantly, they fall off, right? They will fall off on any China chip war. But at the end of the day, everybody loves them. Man, you go on CNBC, man, they all love NVIDIA. They love NVIDIA because they have the chips that are going to power the technology of the future. Right? The chips that truly matter, they make. Now, a lot of people say AMD is too, but NVIDIA is truly the chip maker of the future. So if you believe that these chips that they make are going to power all the AI devices, the VR devices, all the driverless cars and all the drones and everything that is technology going forward, if you believe NVIDIA does that, then when the stock goes up and when it falls, you are okay with that. And you're going to use those buys and sells as advantages, right? If it falls, you're going to look for that support, just like I did back here when it fell to 154 and I was able to buy it at 154. And look at that, it rallied. You know the story. Was able to get a huge premium when I wrote an at the money 190. And I'll tell you what, it took off from there. But I made max gain, and those are the kind of trades I love doing. I love making great trades, making max gain. You know, when I talked about 3M, I talked about having my shares taken away. I know for a lot of you, you don't want your shares taken away, and I understand that. But when you're trading these higher volatility stocks, you're going to have your shares taken away. So you have to have that mentality that we buy the stock, we write the covered call. If our shares are taken away, we love it because it's a max gain. We move on. That's what we do in this game. We make max gain. Go ask your swing trader, day trader buddies how many times they make max gain. I could tell you this, I used to do it. It wasn't that frequent that I made max gain. So, NVIDIA is going to top my list for one of the volatility plays I love using, okay? They are a $150 billion large cap chip maker. Now, they're as big as Intel, and I really don't know what their upside is. I mean, do they go to 200 billion, 300 billion? Probably not. But what I know is this, they will go up and down, giving us great opportunities when Wall Street buys them up to sell them off, to buy them up again. Now, I know I'm getting a little long in this video, but here's the deal. I got to show you my third top trading stock or ETF for 2020. I told you in my year in review video that in the beginning of 2019, I used these 3x leveraged ETFs. But here's the deal. I didn't buy a sector-based ETF where if that sector was tanking, I would be in a world of hurt holding the bag. No, I did that years ago with the big pharma stocks using BIB, which is a 2x leveraged ETF to the pharmaceutical company. I don't do that anymore. What I did was I had a vision. The markets were falling, and in fact, they capitulated and fell to some serious lows. And as we came out of 2019 into 2020, I knew the markets were going to rally. I felt it, so I acted on it. So what I did was, instead of using a 3x leveraged ETF from some China warehouse ETF sector or something that you hear all these people on CNBC that are looking for volatility use or suggest, no. I'm going to use the 3x leveraged ETFs of the Dow, NASDAQ, and S&P 500. Because remember, it's a directional trade. And if I think the indexes are at the bottom, which the Dow was collapsing in late December 2019, and we get any sort of rally, why not use the 3x levered? Because as the Dow moves up 1%, these ETFs will go 3% higher. And that's what I did. Coming out of 2019, I bought UDOW and the TQ. Well, the TQs is the 3x leverage to the NASDAQ. And of course, all the money has flowed back into these tech stocks. Well, I knew it was going to rally, and sure enough, I did. But last year, I made some great trades when the markets were gyrating. I would buy the ETF, write the covered call, which was $3 out of the money, which was really tight, right? If the markets were going to go higher, then I was assured to have my shares taken away. Well, it would pay some $3 and $4 because the volatility was so good to the upside. So I used UDOW and the TQs in some 21 trades last year. And when I tell you that some of those trades were 9% cash on cash, yes, for 30 days, there were some trades where I was collecting 8 and 9% cash on cash. Now, I love using 3x leveraged ETFs in a very measured and disciplined way. Let me boot stomp that. Very measured and disciplined ways. See, I wanted 400 shares of each. I would buy 100 shares, write the covered call. Then, as the stock moved, I'd buy another 100 shares, write the covered call. Whether it went up or down, it didn't matter. I was going to be disciplined. And if the bottom fell out, well, hey, I wasn't all in. Man, how many times did I do that with swing trading, day trading, where I wanted something, I thought it was at the bottom or a good buy? Yeah, I would get stuck holding the bag because this thing would fall further. Well, I have learned to use leveraged ETFs for my cover call writing. Now, if you go to YouTube right now and search leveraged ETFs, you're going to hear a lot of negative stuff because leveraged ETFs reboot every day. They are calculated every day, unlike a stock. You have to know that. You have to understand how leveraged ETFs work. Now, with that said, I disagree. We can use them when we sell premium. Because the way I looked at it was this. If I bought the TQs at 60, I wrote the cover call for 63, and they paid me $4 for it, I was getting 67 regardless of whether the ETF recalculates on a daily basis. I was going to get my 7 points. We were going to move on. So what I'm going to say is this. This is my 3X juice plays but I do it very measured. And again, I don't recommend nothing. Man, you have to do your due diligence. But more importantly, you have to work on your emotions, because if you buy this, I'll tell you, it's going to lean on you if the markets start to tail off. Better have your emotions in check if you're going to play leveraged ETFs. Now, I'm going to leave it right there. I hope 2020 is just like 2019. I want the stock markets up to sideways so I can keep writing those covered calls, those out of the money covered calls, generating that stock appreciation with that covered call premium. I call it my cash printing machine. Now look, as 2020 plays out, you have to understand Wall Street's going to run them up to sell them off to run them up again. Look, even this year they talked about how 2021 might bring a recession. Yeah, you heard that in 2019. And I know a lot of you are like, what are you talking about? You know, the unemployment rate's down, jobs are up. Well, some major indicators in 2019 pointed to a possible recession in 2021. So Wall Street is going to take their profits in pennies. You just need to be prepared emotionally. That's the key here. We're going to have ups and downs in the stock market, but man, getting your financial education, getting your experience will then set you up emotionally so you can deal with those ups and downs, because the stock market now is so big, right? The numbers are so big. We might have a couple $1,000 down days on the Dow. And of course, that is huge because we're conditioned to believe a 400 and 500 down day is like the sky is falling, right? Well, these days, with the Dow getting near 30,000, hey, a $1,000 down day is not that big of a deal when you look at it percentage-wise. And that's the key here, looking at it percentage-wise. So be ready. I'll tell you one of the things I'm going to do. I'm going to have some cash on the sidelines. Not much, but I'm going to be ready for those down days. And I highly suggest you get your financial education, you get your experience, so you too can be prepared for whatever happens in 2020 with the stock market. Now look, if you like what you heard today, I want you to bang that like button. It lets me know you like what I'm doing. And hey, while you're here on my YouTube channel, subscribe. We do this every week. I bring you timely and relevant covered call trades. We talk about those trades, but maybe you learn something. Look, until next time, may all your covered calls be profitable.